Hello everyone. Today we are learning about the tax systems in the United States. How much one should expect out of his salary, etc. The U.S. tax system. Americans pay several different types of taxes to the federal, state and local governments. The IRS, Internal Revenue Service, collects approximately $4.7 trillion in federal revenue every year. The annual filing deadline is April 15th. The 6 main types of U.S. tax. Income tax, a tax on wages, salaries and other earnings. Applied at the federal level and in most states. Uses progressive brackets ranging from 10% to 37%. Payroll tax, FICA, funds Social Security, 6.2%, and Medicare, 1.45%. Split equally between employer and employee. Withheld automatically from each paycheck. Capital gains tax levied on profits from the sale of investments such as stocks and real estate. Long-term rates, 0%, 15% or 20% depending on income. Short-term gains taxed as ordinary income. Sales tax collected at the state and local level only. There is no federal sales tax. Varies by state from 0%, Oregon, Montana, to 9.55%, Tennessee. National average is about 7.3%. Property tax levied on real estate by local governments. Funds schools, fire departments and local infrastructure. National average is approximately 1.1% of home value per year. Estate and gift tax applies to transfers of wealth above the $13.6 million federal exemption, 2024. Top rate is 40%. Affects a small fraction of the population. Key fact: Americans file their federal tax return once per year, by April 15th. Extensions are available free of charge, pushing the deadline to October 15th. 2024 Federal Income Tax Brackets. Marginal taxation. The U.S. uses a marginal, progressive, tax system. This means you do not pay your top rate on all of your income. You pay each rate only on the portion of income that falls within that bracket. Example: a $60,000 earner pays 10% on the first $11,600, 12% on income from $11,601 to $47,150, and 22% on the remainder. 2024 tax brackets, single and married filing jointly. Single filer 10% up to $11,600, 12% $11,601 to $47,150, 22% $47,151 to $100,525, 24% $100,526 to $191,950, 32% $191,951 to $243,725, 35% $243,726 to $609,350, 37% over $609,350. Married filing jointly 10% up to $23,200, 12% $23,201 to $94,300, 22% $94,301 to $201,050, 24% $201,051 to $383,900, 32% $383,901 to $487,450, 35% $487,451 to $731,200, 37% over $731,200. Standard deduction 2024. Single filer $14,600 subtracted from gross income before any bracket applies. Married filing jointly $29,200 subtracted from combined gross income. Head of household $21,900 for qualifying single parents. What it means: if you earn $60,000, single, you are taxed on $60,000 minus $14,600 equals $45,400 of taxable income, not your full salary. Effective rate versus marginal rate. Your effective, average, rate is always lower than your top bracket rate because lower brackets apply to earlier income slices. Where does your paycheck go? Every paycheck has several deductions automatically withheld before the money reaches your bank account. Understanding these deductions helps you budget accurately and verify your pay stub. $6,000 per month gross salary, single filer, no state income tax, term, topic explanation. Gross. Before tax, $6,000 total salary before any deductions. Federal income tax minus $780, approximately 13% effective rate at this income level. Social Security, 6.2%, minus $372 funds retirement and disability benefits. Medicare, 1.45%, minus $87 funds healthcare for seniors, age 65 plus. 401k pre-tax, 5%, minus $300 voluntary retirement contribution, reduces taxable income. Total deductions minus $1,539 from the gross paycheck. Take-home pay $4,461.00 to 74.4% of gross salary reaches your bank account. Paycheck breakdown by percentage, term, topic explanation. Take-home pay 74.4% the money you actually receive. Federal income tax approximately 13% based on taxable income and filing status. FICA, SS plus Medicare, 7.65% fixed rate, applies to all earned income up to $168,600, SS cap. 401k contribution 5% optional, reduces current year tax burden. Federal, state and local taxes. The U.S. tax system has three distinct layers: federal, state and local. Each layer funds different public services. The average American pays between 28% and 35% of their income across all three layers combined. Layer 1 Federal Government. Term, topic explanation. Authority Internal Revenue Service, IRS, Washington, D.C. Federal income tax 10% to 37%, applies to all Americans regardless of state. FICA payroll tax Social Security 6.2% plus Medicare 1.45%, employee share, capital gains tax 0%, 15% or 20% on investment profits. Revenue collected approximately $4.7 trillion per year. What it funds: national defense, Social Security, Medicare, Medicaid, federal infrastructure, foreign policy. Layer 2 State Government, 50 states, term, topic explanation. State income tax ranges from 0%, Texas, Florida, Washington, Nevada, Wyoming, South Dakota, Alaska, to 13.3%. California, sales tax set by each state, 0%. Oregon, Montana, New Hampshire, Delaware, up to approximately 9.55%. Tennessee, 9 no income tax states AK. Florida, NV, NH, SD, TN, TX, WA, WA. Residents pay no state income tax. What it funds: public education, K-12 and universities, state roads and highways, state police, social services. Layer 3 Local Government, cities and counties, term, topic explanation. Property tax average 1.1% of assessed home value per year, paid annually or semi-annually. Local income tax applied in some cities only, e.g. New York City adds up to 3.876%, Philadelphia 3.79%. What it funds: local public schools, fire and police departments, parks, water and sewage, local roads. Total burden example. A California resident in the 22% federal bracket earning $100,000 could pay approximately 22% federal plus 9.3% state plus 1% local. Sales plus property taxes equals roughly 32 to 38% total tax burden. How to file U.S. taxes. Step by step. Every U.S. taxpayer must file a federal tax return by April 15 each year, or October 15 with an extension. Filing accurately ensures you pay the correct amount and claim any refund you are owed. The average federal refund is approximately $3,100. The 5 steps of filing. Term, topic explanation. Step 1 Gather documents. Collect your W-2 from employer, any 1099 forms, freelance, investments, rental income, mortgage interest statement, 1098, student loan interest, receipts for deductible expenses. Step 2 Choose filing status: single, married filing jointly, MFJ, married filing separately, MFS, head of household, HO, qualifying surviving spouse. Your status determines your standard deduction and bracket thresholds. Step 3 Choose deduction method: standard deduction. Fixed amount, $14,600 single, $29,200 MFJ in 2024. Simpler and chosen by approximately 90% of filers. Itemized deductions. Add up mortgage interest, State taxes paid. Up to $10,000, charitable donations, medical expenses above 7.5% AGI. Step 4. Complete Form 1040. The main federal tax return can be filed online, e-file, via tax software, TurboTax, H&R Block, TaxAct, through a CPA or enrolled agent, or using IRS Free File. Income under $79,000. Step 5. Receive refund or pay if too much was withheld. IRS issues a refund, average $3,100. Via direct deposit in approximately 21 days. If too little was withheld, you owe the difference, payable by April 15th to avoid interest. If you like this video, please subscribe and click on the like button, so that we can create more informative videos for you all.